Hello, this is Tom Cloud, this week's Precious Metals Market Update. This is the week of January 19th, 2015. Last week, we got hit with the news that the Swiss National Bank had decoupled the Swiss franc currency from the euro, and we immediately saw the currency go up over 20%, and it produced bankruptcies all over the place as we saw such storied banks as Citigroup, and Barclays take losses of $150 and $50 million, and also the Deutsche Bank took a $50 million loss. One of the big ones was FXCM, which trades out of New York. They lost over $300 million by going the wrong way on the Swiss franc, and they were bailed out by Jefferies. And then the biggest loss came from Everest Capital Global Fund out of Miami, Florida, that lost over $830 million of clients' money by being on the wrong side of the trade. And as we talked about over the last several weeks, this is just the tip of the iceberg as we see both Portugal, Spain, Italy, Ireland, and Greece coming first, all looking at decoupling themselves from the euro and going out on their own in the world markets. And they certainly can't pull it off as we look at a country like Switzerland trying to get back and doing things right and becoming fiscal responsible. And this could later lead to gold being back, more gold backing the Swiss franc currency. So we now have an option of another currency to go to beside the dollar since the decoupling of that. And this will lead to more and more central banks as the week of January 19th wears on. We'll see more and more central banks. As I record this on Monday, we're in a national holiday, and we really expect by the time you see this on Tuesday, things will have already begun to move up again. So this is very important. But the other big breaking news came from Germany now going after repatriation of their debt, of their gold, and taking it back. That it's been primarily in the U.S. and some in London and some in France. And as we all know, as we've talked about in this show several times, we've only sent back a very small percentage of gold to Germany, and yet we are set to send back some 80 tons more, but we're still way behind the ball, and we'll not have all that sent back to them until 2020. But what is interesting is the Germans realize they're in the middle of this, and they're going to have a power play as we see other countries leave the euro. And even though Switzerland was not technically in the euro, they had their currency coupled to it and at a fixed rate of 1.20. Now we'll see other countries and other currencies, as I said, potentially and probably come out of it, which will put Germany in a place of either creating their own currency or going back to their own currency, or creating a currency with 4 or 5 other countries, even the potential of the British coming back in after they've had the British pound here for several years on their own. So this is going to be a very important time coming up. And let me look at my notes, make sure we're not overlooking anything before I get into the actual gold and silver. But one thing people are figuring out, gold is for those prepared for what you don't see instead of what you see. But now you've got the advantage of waiting and seeing what a lot of us have seen for a long time, and a lot of us haven't. But now, with people like Mark Faber out this week, the guy from Hong Kong, a multi-billion-dollar asset manager, says that gold will go up at least 30% in 2015. We've seen numbers from as low as 15% to as high as 50% or more in gold, and we've even seen silver forecast as high as double, from $15.60 an ounce where it started the year up to over $31 by the end of the year. But what we do know right now, here we are on the 19th day of January, and gold is already up 8% for the year, with the stock market down 5% in 19 days. Silver's up 13 0.7%, and palladium is actually down 5% for the year, as there has been some concern with the events the past week leading to a deflation or potentially a world recession, not only in Europe and Japan, but other countries could also fall into a recession before there's enough money created out of thin air to send it the other way. So just be, we look at it as a great buy in palladium, and you're getting a 5% gift, in my opinion, because the reason it's backed up is because of the reason it won't happen. Because these countries, especially the ones that decouple from Europe, will print money and eventually have much higher inflation, and it won't take that long, especially in Greece, as we'll have the election soon and that coming. So we do know, we don't have to prepare for what we don't see anymore, but now we know with Obama getting ready to go on national TV and telling you hidden deep in the Obamacare, we're now looking at the new tax rates going up to 39.6%, and almost every tax rate going up 3 or 4%. And for those of us that own companies, we're going to go up 0.6% to match the FICA insurance, which is $600 for every $100,000 of payroll. So we know these taxes are coming. But the one that's really a game changer is the estate tax. We saw wealthy people like George Steinbrenner and many other very wealthy people die in the last 2 or 3 years and have over $1 billion estates with no estate tax. Now we're looking at Obama going on TV, and of course it does have to be voted on by the Senate and Congress, and we hope it won't pass, but he's going to push for it. And you realize if we go back to a $5 million, that over that 55% of over $5 million would go to the government in new estate taxes. And this has drastically affected the diamond market. I've never seen diamonds are out quicker this year than gold and silver. And that's something I'm happy to talk to you about if you have questions, but also gold and silver. A lot of people are going to move to have private investments that are liquid anywhere in the world, and gold and silver and diamonds are going to be the 3 leading candidates for that. And once again, you're going to see a lot of central bank purchases in the gold and silver market. So if any of you like to talk to me or Dan or Kathleen in my office, give us a call at 800-247-2812. Once again, that's 800-247-2812, and we'll be happy to discuss with you these precious metal market. And if you're looking for precious metals self-directed IRA, you can give us a call and we can help you set that up with one of the approved custodians and tell you how that works. But you can actually get in and own physical gold and silver. You can't take control of it, but you can own it and have it in your self-directed precious metals IRA. And for the ones of you still holding rare coins, we'd like to talk to you about that, because as I've said, if you look back at the Certified Coin Dealer Newsletters Index, rare coins are up like 80% over the last 14 years, and gold's gone from 250 to 1278 as I record this, for over 5 times, over 500% gain. So it's very important that you look out, and the collector market is diminishing, and more people are just moving into metals. And I deal with a lot of money managers, ones that manage from 10 million up to over 800 million. And the 2 largest I have moved to a larger percentage of metals already. So it's very important that you look at that and realize whatever allocation you have for gold and silver, you probably need to move it up. I'm happy to discuss that with you on a percentage of an overall portfolio and give you a range of what I see. I'm not a financial advisor, so I can only tell you what I'm seeing with other financial advisors that their clients buy physical gold and silver from us when they want it, instead of an ETF that you can't get the physical gold and silver in the ETF. So hopefully we can answer any questions. With this week's Precious Metals Market Update, this is Tom Cloud signing out.